Hello, Audrey. If that's you, I wanted to say hello. I just see a county.
Hello.
Hello, Audrey.
Oh, hi. No, this is Maria Valdivia. How are you?
Oh, okay. Are you in the accounting department?
I am in the accounting department.
Okay,
Yes.
that's why I thought it was Audrey.
Oh, okay.
Hello, everybody. My name is Jacques, for those that haven't ever met me or seen me. Okay, I see that we now have a few of the Raimi Associates team members here to join us. I'm going to welcome everybody, and if you haven't already, ask that you mute. Thanks for joining us today. I know you guys have busy schedules. We wanted to take the time to tell you a little bit more about your 401k. We're going to have 3 presentations over a course of 20 minutes, and then we're going to reserve questions until after that. And we'll also give an opportunity at that time for people that need to move on to the rest of the business day to check out then. But we'll have plenty of time for Q&A. And to the extent you might have questions that are very personal or specific to you, we're going to encourage you to chat with Aurora and ask for a one-on-one meeting. We'll have some time on July 8th and July 12th to meet one-on-one or schedule something later after that. So thanks again for joining us, and we're going to get right into our first presentation. We're going to ask that our team member Jessica step forward and unmute herself and begin her portion of the presentation. Go ahead, Jessica.
Hi, everyone. Thank you all for joining us today. I will be talking about what a 401k is and the benefits of having one. For those who don't know what a 401k is, it's an employer-sponsored plan that gives employees a tax advantage way to save for their retirement nest egg. And there are 2 basic types of accounts. There's a traditional and a Roth. They are similar in many respects, but they are taxed different ways. Contributions that are made to a traditional 401k are considered tax deductible because you can save a portion of your paycheck before taxes are taken out, which reduces the amount of income taxes you pay that year. So in other words, the money that you put into your 401k is tax deferred until you take distributions in your retirement years. Let's talk about the benefits of a 401k. Like I mentioned in the previous slide, the tax treatment can be a significant benefit if you'll be in a lower tax bracket in retirement. And since your 401k earnings accrue on a tax-deferred basis, your dividends and capital gains that accumulate inside your 401k are also not subject to tax until you begin withdrawals. Let's see, and compounded growth of earnings or compound interest is another great benefit. The returns that are generated by your savings can be reinvested back into the account and begin generating returns of their own. And this potentially exponential growth of earnings is what allows your retirement savings to grow fast as more time passes. And another great benefit is your employer matching contributions. And this means that your employer contributes a certain amount, which in your case is 3% to your 401k, based on the amount of your own annual contribution. And I just want to let everyone know, not taking advantage of an employer match is equivalent to leaving free money on the table. So I would suggest to take advantage of it while you can. And the last great benefit is that you can choose your own investments. Unlike pension plans, your 401k plan allows you to pick and choose from a variety of investments that allow you to tailor your portfolio with your specific financial goals in mind. Next slide, please. Here's a page out of the enrollment book that goes into more detail about your plan. If you'd like a copy of the enrollment book, please leave a comment in the chat feature below, and we'll make sure to provide you with a copy of your enrollment book. Next, let's dive a little bit more into contributions to your 401k. In this illustration right here, it shows the difference between contributing 10% or 6%, 6% when making $40,000 a year over 30 years. As you can see, the person who contributes more has more growth over a period of 30 years, which means more money for your retirement nest egg. And you want to determine how much you can afford to contribute to your 401k plan. There are limits to how much you can contribute in any given year. And as of this year, the maximum amount that you can contribute is $19,500. But if you are age 50 or older, you can make an additional catch-up contributions of up to $6,500. And I just want to let everyone know, don't feel discouraged if you can only afford to save a small percentage of your paycheck. Every little bit counts, and if you receive a pay raise at work, it's a good idea to increase your 401k contribution so that you can continue to save at the same rate. Now I'm going to pass it over to Allison, who will be talking about a Roth 401k.
Thank you, Jessica. Hello, everybody. My name's Allison, and I'd like to start off by just speaking to the power of contributions made into Roth accounts. And the most powerful aspect of a Roth account is that it's a permanent tax-free wrapper for the investments held inside. So you pay taxes on the funds before they go into the Roth account, and they grow tax-free, and then your distributions in retirement are tax-free. So that is pretty amazing. And these accounts can be really beneficial for your retirement tax planning. So pay close attention. We're going to explain how these accounts work and how this applies to your 401k plan. Next, Jacques. Before we dig into the details about the Roth accounts, I just want to give you a little bit of history about the Roth. And Roth accounts are named after Senator William Roth, who led the creation of the Roth IRA and the Taxpayer Relief Act of 1997. And he was a fierce advocate of tax relief. He led the investigation into the government waste of taxpayer dollars, like the infamous $640 toilet seat purchase at the Pentagon. In 1997, Roth wanted to restore the traditional IRA, which had been repealed in 1986, along with its upfront tax deduction. So the full restoration of the traditional IRA did not meet the budget scoring requirements. And to get around those requirements and allow the traditional IRA to be restored, the Roth IRA was created because it was budget neutral and met the budget scoring requirements. So the Roth came about because of these budget scoring rules, but it was never intended to be the long-term tax-free savings investment vehicle that it is today. It was more or less an accident. I just want to get into some of the details now of a Roth 401k versus a Roth IRA. And a Roth 401k is part of your employer-sponsored plan. So the contributions that you make are deducted directly from your paycheck. And you can contribute up to the IRS guidelines of $19,500 in 2021 if you're under 50. And then if you're over 50, you get an additional $6,500 per the catch-up provision. So these contributions are not income tested. So if you make over $240,000 a year, you can still contribute to the Roth 401k and your employer-sponsored plan per the IRS guidelines. There are required minimum distributions to the Roth 401k, and those start at age 72. So for the Roth IRA, it's a little bit different. The Roth IRA is an individual retirement account that you hold at a financial institution. It's not an employer-sponsored plan. And the contributions are not deducted directly from your paycheck. There are income limits that prevent higher income earners from contributing to these plans. So for example, a single person making over $140,000 a year would not be able to make any contribution to a Roth IRA in 2021. And then there are lower contribution limits for a Roth IRA, so you're allowed to put less money in than for your Roth 401k. The full contribution amount for 2021 is $6,000 if you're under 50 and $7,000 if you're over 50. So it's a lot less. In a Roth IRA, there are no required minimum distributions. So your money can grow tax-free after age 72, can keep growing. Okay, next. This is just a visual representation of what we just discussed. So contributions are represented by a minus here. That means you pay taxes on it. While the funds are invested, that's a plus. That means tax-free growth. And then the distributions have a plus that is also tax-free for your distributions. So it's a plus plus. All right. This is a nice tool from the Capital Group. It's called the Traditional versus Roth IRA Analyzer. You can go to this link and plug in your personal numbers to see if a Roth 401k contribution would be a good fit for you. Our rule of thumb here is that if you have 8 years from your retirement date, that a Roth 401k could be a good option for you. So if this is something that you're interested in, you can also set up a meeting with Jacques about this. You can split your deferrals between your traditional 401k and your Roth 401k. So you have the option to do that. And if you're unsure about what that combination would be, you can also set up a meeting with Jacques. Your combined contributions can't exceed the IRS limit of $19,500 if you are under 50, and then $26,000 if you are over age 50. And lastly, on separation of service, you can roll over your Roth 401k. They're eligible to roll over into a Roth IRA. And really the benefit of that, well, one of the benefits would be there aren't any required minimum distributions for the Roth IRA, as we said before, so they could continue to grow after age 72 instead of taking out those required minimum distributions. And that completes my part of the presentation. I'd like to pass it off to Aurora.
Thank you, Allison. Good morning, everyone, and thank you for joining us. I'm going to be speaking to your enrollment booklet. So this is what the first page of that booklet looks like if you want to follow along. I'm going to be speaking to important forms that are relevant to you as an employee participant of your 401k plan. So the first set is called the enrollment change form, and if you wanted to follow along, it's on page 19 of 32 of the PDF. This basically allows you to enroll, make changes into your 401k plan, and this is information that's captured on you in this first section, as well as your contributions that you'd like to make to the plan. The second portion of that gives you all the options available to you within your 401k plan as far as the American Funds investments. And this is certainly an area where we'd be happy to schedule an appointment to speak with Jacques so he can go over those different investments and discuss what is best suited for you. And this is the second page. The next set of forms are your beneficiary designation forms. And this is where you'll want to, for your 401k, designate a beneficiary for your plan. It captures your information as well as any primary and contingent beneficiaries. And it also requires sign-off. All of these forms do require sign-off by your employer. The beneficiary designation form is returned to your employer. And if you go to our website, there's a great little blog there that discusses 8 reasons to update your beneficiary. So when you have a chance, check it out. It's on the Jacques Journal page, and it goes over the 8 reasons why you should update your beneficiaries. And the last set here is called the incoming rollover request form. This is if you have a 401k at a previous employer, you can roll that over. You would need to complete it. Again, it needs sign off by your employer to roll the previous 401k into your existing 401k plan. And it provides instructions as well to the employer, your previous employer that is, where to send the check. And this is what it looks like. It requires your signature, and it requires a signature from your employer. And those are the sets of forms that you'll find within your enrollment booklet. And I'm going to go ahead and pass it on to Jacques.
Thanks for that, Aurora. So that concludes the presentation portion of what we're going to share today. And we're now going to open it up for up to 40 minutes of Q&A. Once again, if people need to move on because they have meetings or next steps, this is a good time to bow out. If you wanted to schedule one of those one-on-ones because you saw something that is more personal in nature, please feel free to enter the chat. We're going to encourage people. We already had a couple people come in, and so Aurora, I'm going to ask that you look at those and see if there's something you want to bring to my attention that may be a general question, or just we'll acknowledge through the chat that we'll set up a time to meet with you. So with that, just unmute yourself and begin to ask questions, guys and gals.
Yeah, we do have a question about SRI options. We're mission-driven firms, so it'd be nice to be able to opt into mission-driven funds. They perform as well or better than traditional funds.
Right.
There were 2 questions on the same
Okay.
Same question.
Very good question. A lot of conversation these days either comes around what people refer to as mission-driven, environmental, socially conscious, or simply making sure that firms have a balanced governance. What we do in some of our one-on-one meetings, we identify what is the concern that you may have for your filters around investing. And then we can speak to American funds and how they address that. Matt has chosen Capital Group as the 401k provider. So at this time, we don't have the ability to go to some other mutual fund companies outside of that. When you have an employer plan, the employer has to choose a set of fund options. So we have some very good funds within those options that would meet most people's criteria, but they would not be considered ESG, social responsible specific funds. So that's where there's an opportunity, Ron or Juan, to have some one-on-one conversation about what's important to you. And then also, if there's a significant and substantial concern about this, we can take those concerns to Matt and see if we can create some flexibility in the future to add more options. But that's something where we have to have a bigger conversation. Ron or Juan, I'd ask and encourage you to unmute yourself if you wanted more specifics around something, and share your thoughts.
Yeah, this is Ron. Thank you. So it's not obvious from looking at the fund descriptions which criteria different funds may or may not use. I mean, that's typically, funds typically either like are being explicit about choosing investments that are consistent with a certain value system. I'm super busy. I'd rather not take time for a personal consult. I'd rather just read literature and pick the fund that obviously is aligned with my priorities, right?
Well, if you don't have time or you're very busy, what we can also do, and we're happy to do, if someone has a socially responsible filter, just say, hey, this is what it is. We deal with a lot of clients that palm oil is something that's important to them about deforestation. Others, it's guns. Others, it's something else. So everybody has their own definition. If you're willing to share your definition, we have a database through Morningstar, a firm out of Chicago, that we can score these investment options within your 401k for your filter. But if we don't know your filters, we can't speak to how well it does in terms of what you're concerned about. Everybody has different concerns.
Yeah, no, there are sites where we can do that ourselves. I forget the name now, but yeah, so that's easy enough. But yeah, I mean, all one and any others interested, I think we should approach Matt about,
Yeah, sure.
Picking a portfolio that gives us some explicit, easy options.
Yeah, I'm open to having those conversations if it's really a concern about broadening the scope. I'm open to have those conversations with Matt. But if it's just about understanding better about your current options, send us an email. My email is there on the screen, jacques@jacquesbolivar.com. We'll be happy to score for socially responsible or ESG any funds that you're considering, so you don't have to spend the time to find the website that's out there if you're busy or you don't have enough time.
This is Juan. Yeah, I really appreciate that offer. I mean, I'm more specifically interested in climate ratings and divestment from fossil fuels. And so similar to Ron, it would be really helpful to simply be able to see like a column on for all of these funds and be able to say, okay, this one's, A minus, B versus D or F, and just having that really quick rating would be super helpful.
I'd encourage you as a group or jointly to share that information with Matt. And then if he comes to me and says, hey, Jacques, these are the columns we'd like you to put together on a report, I could put together a report for you guys specifically on the funds, but I would need some guidance from the company so that I speak to people's concerns because, again, ESG is something that is near and dear to people's heart, but it's different for each person.
Right.
So if we know what those columns are, I'd be happy to put together a report. We have research, we have the information. American funds may not have an enrollment booklet, but the data's out there and we'd be happy to share the data.
Fantastic, thank you.
Aurora, can you make a note of that so that we engage Audrey and Matt about coming together with a report that maybe some of the employees might want or be interested to see?
Noted.
Okay, thank you. Other questions? Unmute yourself and feel free to. We also have, for those that were listening to Ron's comments, he shared his website that he goes to, Green America. I'm not familiar with that website, but thanks for sharing that. Anybody have a question? Just unmute yourself and feel free to ask. We have any questions about when to make a Roth decision versus a traditional? Do we have questions about paying down personal debt versus making a contribution? Anybody have those types of questions that many of you may be thinking about?
I'll ask another question since no one's asking. So I'm curious as to, that the first question you mentioned about Roth in terms. So if I don't plan on pulling out disbursements from my 401k until I retire and I'm on essentially fixed income many years from now, what's the advantage of doing Roth? Because at that point, I would be in a lower tax bracket if I'm on fixed. It's really just Social Security and disbursements from a 401k. So wouldn't I be in a lower tax bracket then than I am now?
And this is Juan speaking, correct?
Yes. Sorry. Yes.
Yeah. So Juan, are you going to be living in California, or are you going to be living in Bali? Where are you living?
Oh.
California.
I mean, I who knows what the world will be like 40 years from now. So
Okay. Well, that's an important question, because for our clients in California, it is a fallacy to think that you're at a lower income bracket in retirement. Our clients, professionals like yourselves, have degrees, will make good money, will own homes, and stay in the 30% north tax bracket before retirement and after retirement. So there's a strong argument to have a Roth from that perspective. The other perspective is we're running, over 26 trillion in debt. Taxes will have to be raised at some point. So a lot of people are arguing that even if your income may go down, the general tax brackets have to go up at some point to pay for all the bailing out that's happened in '08 and last year.
mm-hmm.
And so if you're going to Bali or you're going to someplace more remote, maybe Juan, maybe you're right. Maybe you're going to be in a low bracket. And like many people, you're more interested in the traditional 401k contribution because you want to lower your tax bill today. So that's a valid point. But I don't know a lot of people going to Bali. So.
Got it. That's helpful. Thank you.
All right, we're going to leave it open for questions, more questions. Either you can enter them on the chat, people seem comfortable with that, or you can just unmute yourself and ask a question. Okay, so we're going to take that as those are all the questions. If you want to reach out to us through email, on the screen's the email. Feel free to ask a question later or schedule an appointment one-on-one, either to talk about how much you should contribute, rebalancing your accounts now that the markets are definitely in a growth mode post-pandemic and we're starting to get out of this. Please, guys and gals, follow up on the socially responsible conversation with Matt, and we will either engage you or him to have a meeting to talk about what you'd like to see so we can develop that chart or report. I think that's a very good idea. And then if you guys are really interested to do some design changes, that's a Matt decision and an interesting conversation. And that can be had through Matt, and we can meet and talk about that offline. So until next time, thank you, and appreciate you guys coming out.
All right, thank you for putting on this seminar for us. Okay.
All right, bye everybody. You take care.